Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's August 5th. This will be our chart lesson for today, and we had a huge rally that sold off real quickly. And notice that you'll see this quite often. That usually your corrections are about a 50 to 60% pullback, and that's about what this is. You can see that across here, and we just kind of hung out there the rest of the day. But this was a nice trend up with a lot of opportunities and a very nice trend down. And so some good trading opportunities today, even though in the end it's really not much more than a big trend, but it's a pretty wide one because we started down here at 2084 and went as high as 2107. So that's about a 30-point move before we took back about half of that. So, but that's what happens every time we sell off and find a strong support. We kind of rally pretty quickly. I think this was maybe a little bit bigger rally than what we have been seeing, but 30 points for one day is a pretty good move. Unfortunately, most of it came in the overnight, but there were several good trade opportunities up through here, and then a couple on the way down. If you caught either one of these, you can ride them down. So some pretty good trades. I do want to say this. I've had a lot of comments and questions about second entries lately. Um, what you have to understand about failed second entries is that it has to be in a context where people get fooled. If nobody gets fooled, it's not really a trap. Um, and I wish I could see a good example of that. This is probably one right here. Um, if a lot of people don't get fooled on this move higher, which they probably did because every pullback has been going higher today, and it looked like we were probably just going to go higher again. So a lot of people are, plus there's a lot of people still long because people have been building longs and riding longs all morning. And so when it suddenly turns and starts doing like this, they all have to exit, and that's why it rockets down real quick. And that's a sure sign that a trapped people by high prices quickly reverse. And this is a good example here of how some people got long here and then they realized they had to exit. And see how that thing shoots down real quick? Then it kind of recovers and bounces down again. That's what a trap looks like. And that's why you suddenly see prices moving real strongly in one direction. And then all of a sudden they're like here, look how prices are strongly trending down. And then suddenly you get this big whoosh to the upside. Well, a bunch of people got trapped on that short right there, and all these people that built up suddenly think, hey, I better exit, and they all run for the door all the weekends, and it runs up real quick. And so you see these huge moves in the opposite direction that go against the trend, and that's why that happens. So make sure you understand that a trap is not really a trap if it doesn't fool a lot of people into entering in the wrong direction. If it fools enough people into entering the wrong direction, then like right here, it's probably going to be a trap. And plus the fact that you already got a lot of built up longs of people that have been building long positions on this big rally all morning, and suddenly they got to exit. And if they don't, they're going to watch all their profits dwindle away, and they dwindle away. Look how long it took to go from here to here. Yet how long did it take to go from here to here to almost take all that back? Hardly no time at all. There's maybe 15 or 20 bars here where there might be 25 or 30, 40 bars going up. And so it didn't take very long at all to take that all back and then some. So understand that, and make sure you understand that a trap is not a trap if it doesn't fool anybody. So that's the key to it, and it's the context of where it's at and whether or not you really think anybody got trapped or not. But anyway, let's talk about the trades real quick. This is what I call a spike in a channel. Prices spiked up and they go into a channel. And what it is this move up is too strong, and so prices back off a little bit and go into a reasonable type, more reasonable channel. That's more of a healthy channel is about a 45-degree angle, and this is more healthy. This is too steep. Prices aren't going to maintain that very long at all. Um, so that's what causes this. And you can see everything's pretty much above the EMA. You get your first clue right here. And originally I had mine a little bit lower here, And so I wasn't sure if there's a break yet there or not, but we got a break here and never got a new high. So I'm thinking it's more along the closes here on this one. And we probably did get a little break or close outside, and then we got two legs up to a new high, and then we kind of corrected. But you can see there was some indecision here, whether or not the market was going to go lower or not. So a lot of people probably were unsure, and this is just a little tight trading range right here. You can see that. But let's back out and talk about the trades. The first trade I saw was right here. This is so close to being able to circle this one blue, but I'll explain it. Notice that we're coming up. You get a first entry. You're coming higher. You get a second entry. So there's a failed second entry short. Notice how bearish that bar is, and you got all these people that are searching for tops and all, and they're probably going to get trapped here. But the fact that we hadn't come back to the EMA, and we're so, we've been trending up, I'd be hesitant to enter there. There's not much room to the high, so I think you got to skip that, even though it does fit the criteria of a possible trap. Um, you just, trends like this don't turn on a dime, so you definitely don't want to be going short here, but I'd be very careful about going long. But when it went lower again and failed and turned up and went out on the same bar, um, I like that trade. That's a nice short trap. They probably trapped several people. A lot of people probably waited on this bar and entered. But you can't go short in a trend this strong, even if you are pretty well convinced that prices are coming back. So um, just wait and be patient, and um, and see if you don't get a better entry. And you do, you get the long. Now you do have to, and you also have to go long at the high of the day. But there's enough reasons right here, and this is strong enough to figure you're probably going to push another, you're going to get another push up. But I did make it green for those reasons. And really, you could really circle two green trades here. And I think I'll go ahead just to clarify that, because there's really two entries here. They're a little bit more aggressive. The second one could just about be blue, but I'm going to leave it green because of the reasons I discussed. It's always dangerous going long at the high or low of the day. Generally, you're going to get a pullback. Notice what happened. We shot higher, but we did come back pretty quickly and pretty strongly for such a strong move up. But that's to be expected. So that's kind of how it works. But then you do get your pullback. You got a little trend working down. You get a close outside, a move to a new low. Um, This is your first entry, then you get a pullback. So this is a second entry counting off this high and counting off the low. Um, you figure we're going to at least retest this high, and we're probably even going to go higher than that based on how strong that was. So I like that one. And then it pulls back again. It ticks a little bit lower again. Now you got a failed second entry short, and this is where you're going to trap some people. Look how bearish that bar is. But you're not looking for any shorts here. You got to be real careful. Um, Smart traders not going to get fooled here, but a lot of people are going to be looking for these tops and trying to pick tops, and they see that bearish bar and it doesn't look very strong here, and they get trapped. So um, I'm not against even adding on to another entry already there. So nice setup, and then you make a new high, pull back first entry, pull back second entry. Your signal bar is not really bearish here, but it closed in the upper half, but it's a couple of ticks off the top. It's not a perfect signal bar, but there's another reason you could enter here as well. Let me draw my line across here and show you. That's a little congestion area, and you know what happens when prices break out of congestion. It's a second entry long already, so I already got one reason to enter it, but it's a failed break lower, and prices do close on the upper side. It's a real small bar, so it's low risk, so I'm willing to give that a green circle, but if you had a little more bearish or bullish signal bar there, I'd go full blue with that one, and that one's real close because it's not a bearish signal bar. It's more of a neutral type signal bar than anything. So it does close in its upper half, so it's more neutral with a slight upward tint to it, even though it does have a little red there. And then you make a new high, and look what happens. Pull back first entry, pull back second entry, and The second entry is not above this bar right here. That's your that's your second entry trigger, but I don't like entering there because again, look at that bar. It is a bounce off this trend line, but it's just not a very good setup. But notice how it ticks higher, turns down, and then they trap all the shorts, and then it turns and gives you a nice bullish bar. That's where you want to enter, right there. And look at it go. Where does it go? It's going to the upper side. And notice how it doesn't quite get to the upper line, and it pulls back, and then it goes again. And where does it turn down? A perfect kiss off that upper line. And so that's your clue that prices are probably uh, not done to the upside yet. And you definitely don't want to be going short anywhere in this whole thing. Do you want to go short? This is a bull trend, and it's a pretty strong one. So, um, but notice this: you really didn't quite get to that trend line yet. If you draw this off the highs using the closes, and so when it bounces here, that's another nice bullish bar. You can kind of see it, and again, there's kind of a little bit of support across there. And it's a nice bullish bar, and you got enough room to get out before you probably get back up here. So I like that one entering there. It's your second entry, counting off. Actually, notice that this is a new low, first entry pullback. So that's, you can treat that like a failed second entry short. You know you're going to trap some people that are trying to pick the tops like they did here and here and here. And so that's a nice, that's where you figure you'll get a trap. And you can see that support, it just slides on across there. Go ahead and slide that across. And then you get a double bottom. It's real tempting to enter here, and you probably could have entered here. But I didn't like it because this bar couldn't get above this one, and this one actually closed lower than that one. Even though there's a little tick lower, it's just a even double bottom with that one. If we'd have broke above this bar, I would have liked going along there, but it couldn't do it. So then you notice how flat the EMA is. Look at all the overlap. This is a little trading range. And then guess what? You have a little failed break lower, and you get a little bullish bar, only a few ticks, so a real low risk entry on a failed break out of a trading range in a bullish tinted market. And it's a nice scalp, but you don't get any more than that. And then you just find more resistance up here at the top. But what I liked about this one is that you've got this high here. You tested it once, you turned down, you tested it again. There's a failed second. Notice that new, there's a new high here, first entry pullback, second entry. It's a failed second entry long that turns down. But yeah, this was a nice trap that fools people, and look at it go. And that's exactly what it looks like. It shoots down real quick and strong. And as it continues to go lower, it picks up speed because all of these people that have been building these longs realize, hey, I got to exit or I'm not going to have any money left. Or either they got in late up here and they're already sitting on a big loss and they have to exit before they take a bigger loss. And then it comes back, and you make another new low, and you get this big bearish bar right off the trend line. Again, you got to go low almost at the short at the low of the day here, but it's not really the low of the day. It's just the low at the moment. But you're still a little dangerous, but it's not like going short at the low of the day over here. This is a trade you got to take, especially when it's this bearish, and you're looking for something like this for your next target. And you can see where we've bottomed out just a tick or two further than that, and then that's where it starts. So that's how I find my targets. People ask me that occasionally. There's different ways to find these things, but this is a pretty good way to find an accurate target. They're not 100%, but they work, enough that you got to pay attention to it, and that's what I use. Now, me myself, I would not. Once we broke free here, I would exit, even though there's a chance you're probably going to rally up here and come back and end up meeting this target. I'm going to exit when we break that trend line. I'm not going to fool around with it, but that's my personality. And people ask me that, why I don't give more direction on how to manage your trades once you get in them, your longer term ones. And the reason is that it's based on your personality. Um, like me, I can't stand to sit here and see me have profit down to here and then watch it take that much profit back. I'm going to exit and look for another entry and then get back in and take it right here. And that way, if I'm wrong and it's going to reverse, then I don't get back all my money. But some people can sit on those drawbacks and continue to ride it down, which is the ideal way to do it, but it just doesn't fit my personality. I get too worked up, I get too frustrated, and so I like to exit and re-enter. But I'm good at picking the entries. If you have a harder time picking the entries, you might be more apt to stay with your trades when you get a good one. So it all depends on your personality, and that's why there's just so many different ways to manage runners. That's why, I don't really push one particular way. I do believe in these targets. They work, and they serve me well. And generally what I'll do is I'll have a exit order down here, a tick or two above that low in case we don't get there like here. But if I don't get filled on that when it starts rallying, once we break that trend line, I'll generally exit. Uh, because sometimes, if this was a range day, there's a possibility that we find support here and we can't even get back down there to make a new low, and you never get back down there. And prices end up going the other way. So you got to be careful with that. So that's how I handle that. But this was a good setup. It really is a form of a second entry. Notice what happens. It moves up, it comes down. So there's your first entry. Then it goes back up, and then it turns back down. And if you went to a smaller chart, there's a clear second entry there. But there's just not enough room in this little small channel to see it on this size of a chart. But it's there. If you want to go look at maybe a 3,000 volume chart or a 3,000 or a smaller tick chart, 1,000 tick chart, you'll probably see that second entry. It's there, and so that's close enough. I didn't like entering here on this one, because we didn't quite get back to the trend line. It's kind of in the middle of no man's land. We haven't hit the low yet, so that might be a reason that you might consider. And there's actually a failed second entry long here, but we're getting so close to the measured move that I just think it's too risky to enter in here without a second entry short, which doesn't come to over here. And so you probably could give this one a green circle. I will, because it is that failed second entry long, and there's going to be people bottom picking, and you see that it would have worked. I'm going to make it green. It's actually this one, because see, that's a new high. Notice that's a little bit of a push up, so that's a new swing high. First entry, pullback, second entry, and there's going to be people bottom picking, especially that far away from the EMA. So in that case, I'm willing to make this one green. I probably wouldn't take it even if I was being aggressive, but because I would have already been in here, and I'd be looking to exit down here. But then we make a new low, pull back first entry, pull back second entry. Notice that this first bar, this is really where the second entry triggered. But you don't have a good signal bar, and then this is not a very good signal. When it broke here is when it triggered the second entry, but it's not a good signal bar. This one didn't even end as a good signal bar, and I would have liked this even better if it would have broke higher and then turned down, but that's bearish enough that I'm okay going there. This is one of those where you might put your limit order back where your original stop would go, and you probably would have got filled on it. But in this kind of move down, you're going to test this low again. The odds are very high, so I'm okay just putting a stop there and you see what a good move that was. So, and then there's actually this one is supposed to be green. This one's supposed to be blue. Okay. Notice you got your break, your new low. Pull back first entry, pull back. There's a second entry short there. This one really doesn't fail, but there's not a short setup there. There's no short you want to take. There's not a good signal bar until you get this bar, and then you got to go short way down here. You could have considered that short. I wouldn't take it because you got the trend line working up. That's the first break of it. Um, but I think you're better off treating this as a failed second entry short and going long on an aggressive trade there. But then it tried to go lower again and go up. And that's really where you wanted to go long after that next push down. And then you get the next push down, which is like a breakout pullback long. And again, that bar, look how there's probably 5 ticks in that bar, and it closed within 2 ticks of the high. That's a bullish slant. So I like going long there on a breakout pullback long. And you can see that new trend line working up there. Um, but if you did go short here, there's some reasons to consider it. But the reason I wouldn't go short there is that you got a short-term trend line working up through there's a little channel, and that's that's your first break of it. So the odds are it may pull back again, just like it does. And if it would have gone lower here, I would have been more tempted to go short. But notice it never broke lower, because then you could have treated this like a breakout pullback short. But it never does that, and it just traps people and goes the other way. And but you're looking for a reversal. So there's other reasons to be thinking long now, because you got this trend down, you got a clear break, a big move down, and then you make a double bottom in reverse. And so that trade happening right here is a whole lot different than this a similar setup in a different context way up here. So keep that in mind, because I had some questions about why I didn't take a second entry on something similar to this. But once you get that break and a clear low and prices start getting choppy like this, you got to be very careful about going short anymore. Very careful. So you definitely want to have room to scalp out before you reach that low of the day. Again, no, that's still not a low of the day, but that's a pretty important low right there. And so you want to have enough room to scalp out when you enter here before getting there. That's the first thing you got to look at. But you probably want to wait on the second entry, counting off the highs, and notice that prices never broke lower, never triggered it on that bearish bar. So but there's people that'll try to sneak in early, and that's what they do. You try to sneak in early, you'll get fooled, and the next thing you know, it's going the other way. So never try to sneak in. If you want to use a limit order, you got to wait on the trigger, which is the break below the signal bar, regardless, and then you can put your limit order in there. But don't try to sneak in, because you will get fooled more times than not. So anyway, another good trading day. Hopefully that my little discussion about traps early on helped some of you that don't quite, you're not just looking for a failed second entry all over the chart. It has to be in the right context, because if you go back here, there's probably a bunch of them here and there. There's one right here is a failed second entry long, but you're not going to go short right there into that trend line. So no, that's not a trade you want to take. Even though you're looking for people that are trying to get trapped to the downs, trapped one way or the other, you can't take any shorts up here. So keep that in mind. You don't have any break of this channel here, and there's probably even a midline in there. I don't have it drawn, but I bet you it's there. It's pretty good right in there, just dead center. And that's another thing I have to tell people, that people send me their chart and they'll have a two-tiered channel and their midline will look like that right there. That's not right. The midline was going to be this. There has to be an equal distance from here to here as there is from the midline to the low line. And if it's not, then it's not right. Now look how that's holding prices from the low side, the high side, and it's equal distance. So that you got that one right. So keep that in mind. And there's probably a midline in this one right here. And that might have given you a reason to take some of these other trades. And you can see that midline right down through there. And it's equal distance. So keep that in mind and make sure you understand that. But anyway, I'm going to wrap it up. It's a good trading day. I mean, there was no reason you couldn't be done by 10:30, 11 o'clock today. But if you hung around, there were some good setups to the downside. So not everybody can trade the mornings. I understand that, but your best trading is really from about 7 a.m., 6:30, 7 a.m. Central Standard Time, that is, till about noontime. And then there's a lot of times there's some good trading from noon to 1:30 or 2. And there's really a lot of times there's really good movement after 2, but I just think it's too risky because if you make a mistake, after 2 o'clock in the afternoon, you don't have time to make it up. You're toast for the day. And so I'm not real big fan of trading late in the afternoon. Start in the morning, so if you do make a mistake, you can make it up. But I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.